Good morning. Welcome to the Meltdown. As I mentioned about a week and a half ago, I've determined that the microphone, when I present the podcast, is very sensitive. So if I sound like I'm not enthused, that's just so that I don't blow it up when I come through your computer. Um, I've got a number of topics on my mind today, and they range from what's being said and what's being perceived to some facts so that you can start to get your hands around why rare coins must be a part of a portfolio. Friday late afternoon into the early evening, I had a meeting with one of my customers locally. He is a CEO of a publicly traded company, and he is convinced that the road to recovery has begun. Things are moving forward. The economy is getting stronger. Jobs are being created. Folks, the top 1%, and based on the criteria that the Department of Labor puts out, he's certainly in the top 1% of income earners. That top 1% is the part that's taking advantage of the euphoria in the stock market. The wealthy, the rich, get richer and the poor get poorer is not just a cliche. Doing some research before I came on, for those people who are, quote, getting jobs, part of the problem is, can they get the hours to cover it? Can they make enough money to make ends meet? Because it's one thing to have a job, it's another one to be able to pay your bills. And that seems to be on the minds of the middle class to, quote, the lower class. It's true of everybody. I've got a good friend who's been around economics and has a great background in her field. And at her level of job in a major corporation, she's facing a potential loss of work. I'm not going to disclose the company or the person, but this is somebody who I know and trust emphatically, and who has the background and the time in on the job to perform at a level that exceeds the job description. It's female, and somebody I've known over 35 years. My concern is that for the top 1% that sees growth, sees the economy moving, you've got the other side of the aisle that believes that we're destroying everything that goes on. And how does all that help you or hurt you? Now, I got to tell you, I am a firm believer that owning precious metals should always be a portion of your portfolio. And the question about gold, whether or not it's bottomed or not, I keep talking about the crest cycle or the Elliott wave, and their technical analyses to determine whether or not you should jump in or not. This is not a get-rich-quick scheme. It is not gloom and doom. I've never taken that approach, and I still don't. And for all of the dealers, the coin companies, that did that for a generation, well over 20 years, they're not right. Finally, the basic fundamentals of why they said things were going to crash were not followed. That's not why it happened. It happens because we seek protection from the government. I've always said that, and most people have always believed that gold is a hedge against inflation. Well, it's not. Today it's a hedge against the government. It's a hedge against companies who utilize assets that maybe they shouldn't. Now, I'm talking about JP Morgan, but you can pick any bank. In the mortgage departments of those companies, they'll take 100 homes and repackage the mortgage on all 100 of them and sell that off. And they'll sell it for more than what they're charging you. So when interest rates are 3.5%, if somebody wants to own that debt out 20 or 30 years, maybe they make a quarter of a point on $100 million or $30 million, whatever those figures are, because they need to cash flow the bank. They're utilizing your deposits. You look online and you see your checking account, your savings account, your CDs, your annuities. You look at your stock portfolio, your 401k. You look at your IRA. I'm guilty of it. I understand the program. I am diversified. But then you get into the reality that you're looking at a digital screen. And folks, the digital screen is social currency. I've seen a couple of big companies talk about it. Now, social currency is electronic, like the Bitcoin. There's nothing tangible backing it except all of the stock investors. Yeah, they're making a coin, and yeah, it doesn't have any precious metals in it. But you know what? Bitcoin's trading at $1,000, and the fact that people utilize it just says that we're at a different level of society. Even my dad at 84 years old pays his bills online. Personally, I'm still a check writer. And yes, it may be archaic, but it's my way. And I believe in it. And I'm petrified of some of the things that happen online. The Target CEO was interviewed by one of the commentators at CNBC. And the safeguards and the manipulation and the hackers and all the rest of the things. And Neiman Marcus has been targeted. And there's other companies that are involved in it. Folks, we are at a different time in our history than we've ever been at. And I was concerned 2 weeks ago, maybe 3 now, when banks started to put loans out again at 5% down. Now they're at 0%. If you've got the credit, you can walk in, buy a house, sign the documents, and walk away. Yes, you're going to pay PMI for the mortgage insurance, but guess what? Nothing down. I like this house. I want to buy it. Thank you. Have a nice day. I'll do the paperwork. You verify everything and do your due diligence. I'm moving into my home. It's a scary thing. So you look at everything that I've just said and you start scratching your head and you wonder, okay, now what do you want to know, Brett? Folks, rare coins are a hedge. Now, I want to thank Jackie and Cindy for the time they spent with me on Saturday. And an accumulation of gold and silver, a few Carson City silver dollars that were a bit more rare. The commons that they owned are $150. The 2 rarer ones are $500. They trade for 550 to 60. And after I sell them, quote, you've got to figure out, I've got to pay to ship them. I've got to pay the postage. I've got to pay someone to handle it. So postage, handling, and insurance carves away from the profit margin. So where it starts at 10% gross, if I get to 3% net, I've still got overhead. I've still got bills to pay. So we're going to take the gold because these were old $2.5, $5, and $10. $2.5 and $5 Liberties and Indians. And we're going to restructure and put that package back together in the form of silver dollars and other silver coins, because on a percentage basis, silver offers much more upside than gold does. Now, I'm very encouraged by the fact that the markets get manipulated, and as long as you're prudent and you look at it and you can see it, then you can deal with it. Markets go long and markets go short. So at the moment, platinum is the only of the 4 precious metals. Platinum is the one that's up. The others are down 0.07%. That's less than a tenth. And gold is down $1.10 on at least the side I'm looking at. That's less than 0.1%. And it's going to trade in a volatile range today. You could see the price of gold trade from anywhere from $12.40 up to $12.55. I mean, we're in the midst of the trading day. And so what I'm going to tell you is that you balance your portfolio. If you're weighted in too much of a position in one place, you start to move it around. I know that silver dollars, Morgan dollars, peace dollars, trade dollars, seeded dollars, all of the dollar market allows for some of the biggest coins to be handled, whether you're paying $30, $30,000, $300,000. That's why you do this. Now, I can tell you that of the auctions that occurred last week, we checked just one of them. But the most expensive coin that this company sold was an ultra high relief. It's a very, very important coin. And of the few ultra high reliefs that were created and minted by the U.S. Mint, this one went for right at $3 million. The four coins that I talked about saw really great numbers. Originally, I'd said I knew we'd see 100,000. The question was, would we see 200,000? And so I'm going to dive into the coin issue, and we're going to talk about rarity and why you buy it. But the 1879 New Orleans 20 and Mint State 60 sold at the retail trend out of one of the major publications in our industry. The 1884 commanded 165,000. The 1887 commanded and brought $258,000. That's less than an ounce of gold, 0.9675. And the 1866 closed out, final hammer price, 176. That's more than the coin sold for the last time it transacted. And so what I'm going to tell you and how we're going to pull all this together so you can understand it, whether you're somebody who's comfortable spending $1, 100, 100,000, 100 million. The reason people spend this kind of money is it is a storehouse of value. And so one of the biggest questions that I want to entertain, and this was one that Michael brought up because Michael's in and around the business, been here for 2.5 years?
4 years.
4 years. Well, it's how fast time flies when you're having fun. Michael encounters people from low income to middle income to high income, as I do, and everyone matters. When I first started out on my own, I always wanted to say that I hoped I wasn't too little for the big guy, and I hope I'm not too big for the little guy. And humility does an amazing thing to you. But in the battle of retail and understanding certain aspects, why certain coins command a full retail premium, or why a coin, because this is something that Michael and I talk about fairly often, once or twice a week, easy, is why would a coin sell at an auction for at or more the retail trend? There are a half a dozen companies that try to report retail transactions. If the dealers don't cooperate, then the information must be relied on via auction record. Now, one of the companies, and I'll refrain from talking about them, but I can tell you that in 1997, it's probably 1997, I became self-employed before the end of 1996. And I just happened to travel up to visit a client in Michigan and drove over, and I met with this other company. And the rep that I had at the time is long since retired, but as we went to lunch, and it was a great time. I had several of the representatives of this company that I took out because at that time we emailed some. Skype I don't think was really around yet, and certainly it's not something I've ever used, but I wanted to fellowship with some people. And so when we got back to the office, and there was a transaction, there was a customer who had decided to do business with me, and my former employer sent that information to this party, to the company. The individual that was responsible for reporting the transactions, the retail prices that people pay, happened to be in the office. So I said to this lady, please go tell him I'm here. I don't tell him I'm here. I want him to see him. And so he came around the corner, and when he came around the corner, he was absolutely shocked and had to deal with me because he was standing there. And I made it very clear that to utilize information that I had provided to a former employer, obviously the anonymity of the client was jeopardized. And folks, it happens out there. This is a reporting company that told my former employer about a transaction that was absolutely legitimate. It met all of the contract criteria that we were engaged in. He was one of 250 people that I agreed to talk to and make that information known to the employer. That's probably of 1,000 people. But the bottom line is that if you want anonymity, you need to say it, because I was reporting a retail transaction and the information leaked out. And this person was confronted. No, I didn't go to the guy's boss. I didn't threaten lawsuits, none of that stuff. But it is important to understand that when there's 10,000 coins auctioned off or, quote, sold in a week's period, and then in another 2 weeks there's another series of auctions and more coins are going to come on the market, it's impossible for the 5 or 6 companies that report these transactions to stay on top of it. Coins that are in demand, you are competing. If you walk into an auction room in our industry and you're going to try and outsmart the experts, I'm not the sharpest knife in the drawer, but I'm far from the dullest. If you want to begrudge me of my experience, knowing what companies promote, why they promote it, where the promotions are going to go, what coins are going to be worth in 5 or 10 or 20 years, then by all means step in the room. You will be in shark-infested waters because the 10, 20, 30 regulars, depending on what it is you're going in to buy. Because I always say you get a red book, you look at it, and you go through it, and you find what you like. And we talk about it. And we decide whether or not there's a real objective at the end of the day. But you step in that room, and guys that have been doing this for 20, 30 years, 10 years, they smell fresh blood. And folks, you can go after a coin, and if they want, they will get you in the euphoria, the ether of bidding, and you'll pay more than they would have ever thought of retailing a coin for. See, you've got wholesalers, they buy, they work on a tight margin, they sell to a retailer, and the retailer marks his coins up. Some coins, folks, 40% is legal. It's legitimate. I know a dealer who marks coins up 150%, and that's questionable. Integrity? Look, people pay for the experience, for the knowledge, the information. You can absolutely go to somebody who's got 5 years of experience, and depending on what they've done, maybe they understand the retail market. Maybe they understand marketing from their company's perspective. But in my case, I've worked for several companies. I've been around the industry for almost 30 years. And so I'm looking at things from a perspective of goals and objectives. What are you looking for today? Now, in the case of Jackie and Cindy, they're in their 60s. They're still pretty young people. And their family bloodline takes them out into the 80s or 90s. My dad is 84 years old. It's given me a different perspective on life. As I approach age 55, I tease about the discount on the senior menu at one of the big breakfast chains out there. And ultimately, if longevity is what I seek, and of course I'm not ready to die yet, I've got 30 years to go just to catch my dad, and I know Social Security won't be around, and I need more hedge than to just trust gold or silver. I know it's being manipulated by big companies. If you want to get in the gold market, and I can tell you right now that gold is trading, looks like in the spot market, just under $1,250. The big banks that are hedging it, the big banks that are investors that are buying, whether they're buying mining shares or futures contracts, it's all part of the derivative that I don't want to be a part of. I want physical precious metals and rare coins. And knowing that over a 10, 20, 30, 50-year period, they tend to get rarer because more people get involved. There's no shortage of coins. The shortage is of money. And people that I talk to are running into annuities. Folks, it's the wrong place to be. Now, if you're an insurance agent, I'm not trying to beat you up. If you're in the annuity market, I'm not trying to beat you up. There's certain amounts of capital that must be made to keep capital requirements in place, and that's not my industry. I look at the pie and I decide that of 100% of the pie, do you have enough money to make it for a long period of time? Can you survive on X amount of dollars for a year or for 2 years? And if you've got 20 or 30 years to live, you need to have some of the funds diversified in rarer coins so that you understand that what's rare today should be more rare tomorrow. It'll be more in demand. When I owned the two 1879 O's that were graded in Mint State 60, it was part of the Eagle collection. The tag on the holder said so. And I remember owning both the coins. And I think at the time, and I didn't do the research, I'll probably go look it up after the show. Matter of fact, I'll make myself a note. I want to say that the coin originally sold in the $35,000 to $40,000 range. It sold for $135,000. That's the retail trend. If it was a retail buyer that paid the $135,000, that's great. But if it was a dealer, and the dealer's going to make 10%, that takes it up to $148,000. And then if a 30% bid-ask spread, a 40% markup comes into place, now the coin's almost pushing $200,000. The gain, the difference from retail to retail, could be 5 to 7-fold. And there's more coins graded higher today than when I did the collection back in 1999. That's when I finished it. So more coins coming into a market sometimes can adversely affect it. But the other side of it is if there's more demand. See, that's the difference. Supply and demand is something that all kids are taught, and we pick up on it. We understand that that's how markets get made. But what I can really tell you is that when you look out over the horizon, if you're just trying to shotgun your way into saving some money because a guy told you this is my price, you're liable to get yourself caught into an area of a market that you're going to absolutely get devastated in. That's the experience I try to bring to the market. So when I talk about these numbers, whether it's a dollar coin or 100 million that you're going to build around a portfolio and you're going to move 5, 10, 15, 20 million dollars, folks, this is the hedge. This is the safe haven. Do I think gold is cheap? It is compared to 1900. It's not when you look at gold back in 1999 when it was 254 bucks. But I still think gold should be in a portfolio. I know that there's a major commentator who's got a blind trust. He thinks gold should be there. And he's a stock guy. He's not a gold guy. And I do not believe that GLD qualifies. You cannot buy an ETF or a mining share because you don't own physical gold. I love rare coins. I love really rare coins because more people seek them. What I really want to own are coins other people are going to want. And it's easier for me to sell circulated silver dollars at $30, $35 a coin than to get somebody to buy the one that matters and spend 10 or 20 grand. The market narrows. It's not that narrow. There are people lining up to spend $5, $10, $20, $50, $100,000 like it's absolute water. And for them it may be. For you it might not be. I sold a coin. I mentioned it to a customer in Hawaii a little over a week ago. And Nick, I want to thank you for your email and thank you for your business. You've been doing it with me for a long time. I've met this gentleman. And he did some due diligence and found the research and said, you know, the coin trades for between 4,200 and 4,750. Why the disparity? And why do you want $5,000 for yours? Now, I am a retail dealer. However, when I buy a big hoard of stuff, I need, want, and desire to be able to price it right. I bought $2.50 Liberties, $5 Liberties, non-graded BUs, and graded Mint State 60s. And the coins themselves are what they are. There's no making up what coins are. But when I look at some of the dates, Oh, a nice 1887 San Francisco $5 gold piece is about a $550 coin at retail. Okay, so those may be coins that I sell at $540, 2% back. Well, the bottom line is that they're good deals because I bought them over the counter. And if you're getting offered a decent deal and you just want to check, email me, Brett, B-R-E-T-T, at thegoldexchange.net, or call me, 281-548-2646, hit option 0, avoid the phone system, and I'll talk to you. I don't expect that I'm going to get 100% of everybody's business, but folks, online buying, if you can get the right price, I'll tell you to. I won't go snake a coin out from somebody that's online. I just don't function that way. But what I will tell you is whether the deal you're getting offered is a good deal. Before gold spiked $20 on Friday, I had 2 different customers ask me about a flyer they got, trying to buy 10th ounce gold American Eagles at $130. I don't know whether or not the company is going to represent and take care of the clients at that number based on the movement. But you know what? Here's the bottom line. While I don't expect 100% of everybody's business, I also am more honest about it and will hit you right between the eyes. I told both guys, call the dealer, buy as many of those coins as they'll sell you at 130, because I don't think I can buy them for less than 140. Period. And I don't care who you buy your stuff from. I'll buy it. I don't. Market's the market. And that's the difference. Understanding what coins are being targeted down the road is a pretty simple formula for a guy who's been around the industry for 30 years. Beautiful matters, but so does the CAC sticker. And so in Nick's case, I said, here's a coin that needs to go to the other grading service. It's one that came out of my own collection. And based on circumstance, it's time to sell some stuff that's left anyway. And so the coin that's been in an NGC holder for probably 10 or 12 years needs to go to PCGS to see if they'll upgrade it, make it a mint state 60 coin. Regardless of what they choose to do, you spend 30, 50 bucks to get it out there, and you do that. But then you send it off to CAC, and if the coin gets the green CAC sticker, it's probably worth $5,500 to $6,000. If it gets the plus sign, or if it gets a star because it's got premium look. If it gets the gold CAC sticker, it might as well have upgraded, because now you're talking about a coin that might be $7,000 or $8,000. But Brett, wait a minute. Someone told me it's worth $4,200 to $4,700. You cannot go by those tags. Yes, they're an indication. Yes, if you own bulk silver dollars in mint state 63, they're worth X amount of dollars on a computer screen. But that's the battle. I've tried to point it out time and time again. An 1882 San Francisco Morgan silver dollar in mint state 64 is a coin that trades for less than $100. But they're on an online auction site that I can see at over $2,000, because they've got color, they've got strike, they've got pedigree, they've got the other incentive representations that make them worth more money. Pay the premium. Let somebody who knows what they're doing, who's got the 30 years of experience, bring it all home so we can do something. Anyway, I'm pushing my 30 minutes that I try to limit myself to. And folks, if you've got questions, I will implore and beg you to either email me, Brett at thegoldexchange.net. Now that's Brett with 2 T's at thegoldexchange.net. You can go to themeltdown.com. We stream through Ustream, and if you register, you can chat with me live during a podcast. If you want to talk to me, give me a call after I do a podcast, 281-548-2646, hit option 0. I'll be more than happy to discuss anything with you. I love coins. I love other collectibles. This is the market to be in, because that's where wealthy dollars are going. Prudent money is moving into the market. Anyway, I never get off a podcast off air without thanking Texas Children's Hospital, both the Downs Clinic and the Ronald McDonald House at Texas Children's. Now, there are 2 facilities here in Houston. One's a 50-room facility outside of the hospital, but on the 4th floor there are 20 rooms, and they house probably 40 to 60 people every night, so that families can get a respite from the chaos or the stress of sitting next to their children as they deal with the needs and the fight that the kids are dealing with. If you can provide a hot meal, please call 832-824-8600. That's 832-824-8600. Nancy Allen and her staff will be more than happy to help accommodate you getting a hot meal in for these people, or a tithe or an offering if you just want to make a charitable contribution. The Meyer Center, that's the Downs Clinic, is run by Catherine Ostermeyer. She's just one of the doctors there. But folks, kids with disabilities are absolutely encouraged to make their visits there. I appreciate the doctors, the nurses, the staff, and of course the volunteers at Texas Children's throughout the medical center. Kids need our help and our love, and gosh knows, two healthy parents anyway. Folks, I'll be back about 2:30 this afternoon, I hope. We'll deliver some more information about what's going on in geopolitical issues, how that affects the economy, how it affects you. Move some money around. Give me an opportunity to build a portfolio and talk to you the way, heck, I think Saturday I was here for a couple of hours talking to Jackie and Cindy. Appreciate it again, the time, guys. Folks, have a great day. Be careful out there. God bless you. We'll see you this afternoon. Bye-bye.